This is a TreasuryONE Weekly. Despite the fact there was no big news or events last week, it was still an important week for the rand and the dollar, as it confirmed two things. One is that the US dollar wants to go a little bit weaker, and that's its base case. And with the dollar being weaker, that means that the rand wants to pull stronger. We saw the rand drift a little bit stronger in a low data week, and this is still our base case that should the local issues get out the way, that the rand will start to appreciate, and we could see the rand a little bit lower in the medium term. The rand is currently stuck between the 18 and 18.15 range. We do expect that range to be tested this week with a lot of data out of the US. We've got US Fed Chair Powell speaking later on today and tomorrow. We also have the US non-farm payrolls out on Friday. And just to give a bit of background, the rand had the dubious honor of being the worst performing currency in the world for February. Speaking of events this week, we've got the Fed testimony of Jerome Powell. And basically what the markets are looking for is some indication of where the Fed's thinking is at, whether they're going to be a bit more hawkish or a bit more dovish, and the market will go through a fine-tooth comb over this and act accordingly. If the Fed is a little bit more hawkish than expected, we can see the US dollar being stronger, and we can see that rand pushing that 18.50 level, and vice versa is also true. The big data event for the week is the US non-farm payroll numbers that are out on Friday. We've seen that the US non-farm payroll numbers have exceeded expectations for the past 10 months. So if that continues, if the data shows that the job market is still very hot in America, we could see a stronger dollar, and that the Fed will need to act upon it. So that will be dollar positive, and again rand negative. The other side of the coin is we've got indications from the treasury yields that the treasury yields are the most inverted they have been in the past 40 years, which normally indicate a recession. And could this be the one data set that starts showing us that the US economy is moving into a bit of trouble? If that's the case, we could see the rand on the front foot as we head into the weekend. Speaking of the rand, as we said earlier on, we do believe that the rand is currently between a rock and a hard place. It's in that 18.50 level, with a lot of the pressure coming for it to weaken a little bit, to test that high of the 18.50 one we did a couple of weeks ago. But if things align and the US is a little bit more dovish, the data starts looking a little bit worse, then we could see the rand pulling back a bit. Our base case is that for